Boom. Going live. Actually, let me chop up. We'll get some music going here too. Need a little bit in the background before we start talking. I'm live on my dashboard. Thanks for coming out, everybody who has at the moment. Check the audio levels. Looks good. I can make that a bit louder. Thanks. Okay, we're live. How's it going, guys? It's gonna be a good talk today. Here we go. All right. Let me just turn down my audio a little bit. I think the music's maybe a little bit too loud. If you can, confirm if the audio level's alright for you. And we'll get started in just about a minute. There's a lot to talk about today. This is actually one of the crowning achievements of my channel. Other than obviously calling the coronavirus, I would say this is the first time since I started making these videos I've had a pick that I've solely introduced on the channel. I didn't start it before I started my YouTube channel, and it's come to fruition in probably the shortest time ever. Should be fun to talk about. Please check the video resolution. The current resolution is 280 by 1540, which is not optimal. Just got a message, hang on there. Okay. I think I just about have everything I need. Let me just check on the resolution really quick. It says it's not optimal for YouTube, but I don't know, just let me know if you can see the quality alright. I think 250, 2560, 1440, I think that's okay. What's 1440p resolution? Let's search that up really quick. Yeah, I think it's okay. Bro, so many of your picks have 3X. I kick myself every time I see them for not investing earlier, SMH. Yeah, what are you talking about, man? So, I've had a lot. So, one was Chris. Let me just show you that one. This one was insane. Admittedly, I only talked about it very, what's the word? Very subtly on my Telegram journal. But yeah, I was talking about this one in like the $1 range, and at its highest, it got up to $14. That was a 14x. That was crazy. Another one that was really insane was NXTC, that's Nextcure. This one was insane too. It's not doing so well now, but if you look, I got that around IPO. It went from $19 to $82. That was insane. I don't know, what's that, a 5x? I don't quite remember. But now today we're going to talk about something that's a little less insane, less crazy, but actually in a way is just as impressive. So we've got land here, and this is one of the most boring companies in existence, but it's also my most exciting one at the moment. Just hang on one second, I got to adjust something. Alright, I'm back. So, I think you guys know this, but I've been covering Gladstone Land and farmland in general on the channel for about the past year. And when I first talked about it, actually was in this video right here, what I'm buying during the crash, and I uploaded that on April 6th, 2020. And the headline from that video... Oh, hang on, you guys can't see the chat. Ah, the chat's not on stream. There you go. There you go, guys. Now I get your clout. Okay, so I uploaded this video on April 6, 2020, and it's called What I'm Buying During the Crash. And this video was pretty much advocating, or at least it was documenting what I was going to do. What I was going to do is I was waiting for the market to crash just before the Fed decided to flood the market with money at the expense of inflation and everyone else. And I decided, I was pretty much saying, on my part, I was going to buy as much as possible, but I wasn't going to buy just about anything, right? I wasn't going to buy, you know, I guess Tesla doesn't count, but I wasn't going to buy like the whole normie stocks like Peloton or what other like electric vehicle alternative people were looking for. I was going to go into things that were safe and tend to perform well in high inflation environments, and especially hyperinflation. I didn't think it was necessarily going to get to hyperinflation, but it definitely was going to get to high inflation. So that led me to, naturally, Gladstone Land, this right here. And just to show you, to prove it, that I did in fact 3X. Let's see what we got here. Where is it? Oh yeah, there it is. March 1st. Well, we'll go to when I uploaded this video, right? So April 6th, 2020. I think April 1st is good enough for you guys, right? So April 1st, 2020, this was a $13 stock. Ideally, I mean, I was talking about it on Telegram earlier. Ideally, you should have been buying it during the crash in March, but whatever, we'll say April. It was a $13 stock, now it's approaching 30. So to me, going from close to 10 now to $30, like obviously there's a little bit of wiggle room in there. This was a 3X, all the while paying you a 2% dividend. It was higher back then. On farmland, one of the safest assets out there. And actually, I did the research, and this pick, it's not as exciting, it's not as hypey. This pick in the same period from March 2020 to now did better than Tesla. It's funny, right? Because Tesla gets all the hype, but here we are. I mean, this guy, it's not quite the last year necessarily, but this guy goes from, at the low, again, $10.22, approaching 30. Tesla in that time went from 563 to only, what's this? Yeah, 1137. So that was a 2x. So again, it was not exciting, it's not hypey, but I beat Tesla with farmland. So we're going to be talking a little bit about how I did this and then what are my next moves after that. Crazy though, isn't it? And I can tell you, holding this stock was a lot less stressful than for the people who hold Tesla, right? So Tesla, it is just a roller coaster ride. I mean, it's crazy. You got to be on the top of your ball. You got to be on the top of your game every single day you're following that stock. Not with land, not Gladstone Land. This thing's crazy. Yeah, this is Tesla. Amazing. Anyway, so I'll play for you a little bit from this video I uploaded on April 6, 2020, talking about this 3X. It's funny because this video only had 347 views. Meanwhile, like, the value I was dropping was insane. And half of these comments were just memes like invest in magic beams. Yeah, people weren't really getting it. And by the way, this is why I don't upload every day, because for the most part, you know, the daily fluctuations of the market, despite what other YouTube channels tell you, are not important. I only get one really good idea probably once every 6 months, but it's much better to be consistent, pick fewer stocks, and get bigger wins than just being in everything and having emotional swings up and down with the market. So anyway, in this video, I played a section during the Gladstone Land shareholders conference call, and I think, you know, it's actually aged very, very well. And after we listen to this, we're going to look at my Telegram journal and see what I talked about and just how prescient that was. Let me know if you can hear this all right.
To perform well compared to other assets, like some recent downturns.
Let me turn off the music.
The NCREIF index, a farmland index, which currently is made up of about $11.4 billion worth of agricultural properties, including ours.
There we go.
They've averaged an annual return of about 12.3% over the past 20 years. And I think during that period, it's 5.6.
I'll go back for you guys.
Decrease overall.
Quarter of 2019, some very compelling arguments are made about. My mic was a lot worse back then. Farmland, about why this is an asset that you should think about at the very least during these times.
Overall, farmland continues to perform well compared to other assets, despite some recent downturns in certain regions. The NCREIF index, and this is a farmland index which currently is made up.
When the CEO here is done talking, I'll sum up what he's saying.
about $11.4 billion worth of agricultural properties, including ours. They've averaged an annual return of about 12.3% over the past 20 years. And I think during that period, it's 5.6 for the S&P index. And as you should know, that during those 20 years, the farmland index has never had a negative year, unlike the S&P, which I think has had 6 net years over that same period, negative years over that same period. Farmland has generally provided investors with a safe haven during the turbulent times in the financial marketplace, as both land prices and food prices, especially fresh produce, have continued to rise steadily. In closing, please remember to purchase stock that you're purchasing stock in a company is a really long-term investment in farmland. This isn't a technology stock that you're going to wake up tomorrow morning and there'll be some big aha moment. I think investments in our stock has 2 parts that I love the most. First of all, it's similar to gold. It is a hard asset, dirt, farmland. It has an intrinsic value because there's a limited amount of it, and it's being used up by urban developers, especially in California and Florida, where we have many farms. And second, unlike gold and other alternative assets, it's an active investment with cash flows to investors. And we believe this is better than any bond fund because we can keep increasing the dividend. I think a good way to look at our farmland fund is a wonderful hedge against inflation.
Bingo.
I think this is a great fund, and once we get a bit larger in terms of asset size, I hope that we'll get listed on the RMZ index. If that happens, it should.
That did happen, by the way.
Bring in an additional institutional ownership, which hopefully will increase the price a little bit more and some more liquidity.
Yeah, let's take a look. Did the price increase a little bit more and bring a little bit more liquidity? I would say it did.
I noticed that Vanguard, who has the largest REIT fund, those folks recently purchased a nice amount of the stock.
The last thing I'm going to be... So anyway, there you have it. I mean, he sums it up better than I could, obviously, because he understands his business. That's the CEO, David Gladstone. This was a great inflation hedge. And how I decided to buy this company is actually I looked to history. I also was reading a little bit from Michael Burry's post, but this was mainly influenced by some independent research I did on my Telegram journal. During high inflationary periods, businesses and really the supply chain tends to collapse down to basic materials, and especially food prices. Those tend to get hit the hardest, right? Because if you think about it, when high inflation comes, when money's flooding into investments, what happens first is as soon as there's some sort of price shock or people get nervous, the first investments they sell are the most speculative ones. That makes sense, right? So let's say you've got like $10 in Dogecoin, $10 in Bitcoin, $10 in gold, $10 in a risky Tesla stock, $10 in a blue chip stock that gives you dividends, and $10 in your checking account, right? So then say the price of food, it doubles and you get nervous. Your $10 in your checking account now isn't enough to cover the price of food that you need for your daily survival. What's the first thing you sell? It's the highly speculative stuff, right? It's the stuff that was like a long-term crazy thing, but it's not something you necessarily need, and the risk profile is not as good. So those higher, the further down the line investments, right? Those more speculative ones, those tend to collapse more. And the more inflation rises and the more people are forced to sell those speculative assets to pay for their day-to-day survival needs, right? In this case, food, right? The more that rises and the more the prices of everything else collapses. And as he was pointing out, there are many possible inflation hedges. I went over all of them in this video, right? So I went over gold, platinum, palladium, a few other ones. You'll have to watch this video. But out of all of them, farmland seemed to be the best one. And that was because it has the properties of gold, right? Because this company was taking debt, like useless cash that was getting inflated by the month, and using it to buy real farmland. And this company in particular had a way in because, again, the full respect to the CEO, obviously, but he's an older gentleman, and you could tell by the performance of this company, he did a good job talking to these farmers, getting comfortable, courting them over the years-long process of buying these farms, getting them comfortable, and in turn, trading cash for these awesome assets, right? So we know how much farmland appreciates. He told you the percentages, but trading cash for those farms during a highly inflationary environment did really, really well, and the stock price obviously follows that completely. Now I see Seeker of Light, he asks, do you have a Patreon where you're constant uploading your picks, predictions, or analysis? I'd sign up. there's no place where I'm constantly uploading my picks or predictions. I should pick one place and stick to it. So sometimes it's funny, right? But sometimes I'm posting on Discord, sometimes I'm posting on Twitter, sometimes I'm posting on YouTube, sometimes I'm streaming, sometimes I'm posting on Telegram. But to answer your question, I don't have anything to sign up for. There's nothing paid. I'm not really in that game at the moment. If you want my most detailed thoughts, I do think the best place to follow me is Telegram. There's a link on my channel. And again, we'll be going over the post on there in a second. But that was going on with Gladstone Land. Really, really incredible. So if we're going to go back over here, we want to go to holders. And this is really, really cool. This is actually a good sign. So it wasn't like this when I started investing, but I've noticed that Vanguard and BlackRock, the two biggest beneficiaries of the Fed purchasing program, right? So they get all the newly created money from the Federal Reserve, and they were rushing in that funny money, that new printed money, and trying to buy real assets with it before the value of that money collapsed, right? Because with inflation, how the game works is whoever spends the newly printed money first gets the most value out of it. Because the market doesn't immediately adjust when new money is created. It kind of flows through differently in different industries. I've seen people argue that Bitcoin, for example, is getting a lot of the QE money, like pumping up the value of those assets. So whoever it was, I just knew this would happen just based on history. I knew when these institutions got newly created money from the Federal Reserve, they would rush as much as possible to buy real assets. I thought that was gold, so I was wrong on that part, but thankfully I got out of that pretty quickly. And if I remember, just based on retail sentiment, platinum and gold and silver flew up pretty fast last year. But one thing I knew for sure is I knew they would try to flood that useless cash into farmland. And boy, I was right. Look, again, two biggest shareholders, Vanguard Group and BlackRock. And those are the guys getting Federal Reserve money. And here they are. Just as that conference call predicted. Crazy. And they're the two largest shareholders. Next thing, too. One thing you can tell is this... Oh, bummer. You can't see. I have to sign in. Here it is. Perfect. So one thing I've noticed, too, is the investor sentiment on the stock has changed a lot. There's liquidity in here like there's never been before. And by the way, guys, this stream isn't just going to be about like a victory lap, right? Because you guys, when you come here to see my streams, you want to see new ideas, right? We're not always looking in the past, right? Because as much as I think this thing will run up, I suspect very soon this is going to be a $30 stock. Possibly more. It depends on how much the company decides to raise cash and sell the shares and dilute the price. But anyway, as much as we like to look and, evaluate our wins and see why they happened, I will be giving a future pick, or at least something that I'm buying. I can't recommend to you anything, but something I'm buying that I think has something very similar. Isn't getting a lot of attention, but will get attention later. So anyway, one thing that's crazy is I've noticed, I've been following this stock for a long time, as you can see now, since, I guess, March 2020. So we're coming up on about more than a year and a half. One thing I've noticed is that people are all over this stock. I mean, if you look, there's comment after comment. We'll read some of these, just showing like how much of like a sentiment hype pick this has become, which is crazy, right? Only in a high inflationary environment would farmland be exciting. Well, here it is. Look, so this has been one of my best investments over the last few months. Farmland is getting more scarce over time, but that's not what I wanted to look for, actually. One thing I wanted to highlight was the posts about inflation. This is just all talking about value, which is great, right? They've got, FFO increases, great participation rents. This is all good commentary, but it's late. You should have been here a long, long time ago. Where is it? Here it is. So this is a very common sentiment you're seeing. Food prices are going way up since inflation is here to stay, so prices will increase rapidly. Inflation is not temporary. Now, Antonio is not wrong. The problem is you should have been thinking, investing, you have to be looking forward, not at the present. You should have been thinking about this, around when I was posting this video, April 6, 2020. But still, I'm happy to see people in this stock, obviously. One thing that's really great about this stock is that it pays monthly dividends. So it cultivates a really loyal stockholder following, so it's good to see all these new people in here. But obviously for people watching this channel, I want you to be able to look forward to the future and make more money if possible. And I want you to start thinking that way instead of being reactionary like some of these people on here. They're not wrong, obviously, but if you want to make the big money, get those 3X's, you got to be thinking ahead rather than in the present. And you know what's funny here is this guy's talking about, his name is Eugene, and he's talking about fire. That's actually not me. I promise that's not me. So I don't know what's going on there. Hey, John Doe, you're asking, how's it going? Well, it's going pretty good. We're just doing a live stream at the moment. Actually, I wouldn't say it's going pretty good. I would say it's going very, very well. This is really exciting. In case you missed the beginning, we're talking about one of my buys here, Gladstone Land. I talked about this a lot on Telegram. And since March 2020, and I was buying it a little bit before, by the way, it's 3X'd. So this is pretty happy. This is a celebration stream. But not to worry for people who missed it. I mean, obviously, this is always going to be a solid company. If you look over here, I mean, again, the revenue just grows and grows every single year. It's safe. It uses cash and worthless debt to buy real assets. Not many companies can do this. Farmland is one of the few, like, I wouldn't say cottage industries, but it's a very middle-class profession that Wall Street would love to get its hands into. They want to be able to control that and kind of corporatize it, but it's not there yet. So what they're going to do in the meantime is they have to buy companies like this one, Gladstone Land and others. You can see, again, Vanguard and BlackRock. They got to take that Wall Street money and they got to pay any price they can to get this, right? Because guess what? Farmland at the moment, it's not too corporate controlled. There's only a few smaller players like these guys in the market, which means Wall Street's paying your price. Your price. They have to listen. You get to dictate your price terms. So a lot of the economy and a lot of the stock market is kind of like rigged or favored towards the big players. But sometimes if you're smart, you can position yourself ahead of time to the point where you're dictating the terms of the price, right? So I'm holding on to so many shares, and so Wall Street's got to pay my price, right? So that's why I'm sitting on a 3X, and the people in the conversation section just now are talking about inflation, right? So again, I was talking about inflation April 6, 2020. And in fact, I'm actually going to bring something up on Telegram. Just give me 1 second, okay? I think that was really, really crazy what happened there. So let me find how I can get this picture. This was from my Telegram journal. Let's see. One must think about commodities. How do I find that? Oh, this is... All right, you guys are going to think this is amazing. Just give me 1 second, okay? Window capture. Switch to Telegram. Ah, this is great. Okay. Let me just make sure I get the chat back on top. Oh, chat is there. Okay. Ben says, do you leverage into any positions? I have before. I've leveraged only 2 times. You know what? Before I talk about Telegram, I'll answer Ben's question. So, let me go back here. There we go. Boom. Okay. So, I've leveraged only 2 times in my career. My investing career. I've used leverage to access money tied up in holdings without selling them, and I've used it one other time. So one time I used leverage for this biotech company, Global Blood Therapeutics, and I've had a few videos on this channel about how to look at biotech stocks and how to see if they're going to win their clinical trials or not. I recommend you watch those. But anyway, I had a feeling that this thing was going to blow up and do well. So where was it? When was I buying this thing? I think I was buying it like in the 2018s. So it went from like around $40, $30 to its peak at $83. That's when I sold. So that's one time I did use leverage. I used options and margin, and that did very, very well. Now there's also one other time where I broke a lot of my rules and it ended very, very bad for me. So let me find that one. But generally, no, I don't use leverage. Yeah, this is one. Okay, so this is another time I used leverage. So this company, Helium 1, it was trading on helium, which is a rare element. Obviously, these days it's used in MRI machines and other things like that. This is a trash company, by the way, just my opinion. But anyway, it went from $7 to $22. So I was anticipating they'd have some next binary news, some great binary event. It was going to blow up. It obviously didn't. Their drilling exploration failed. And yeah, using leverage, using margin really, really multiplied and magnified my losses. This particular stock wasn't my idea. I got it from Niche Commodities. He's a mutual of mine. So obviously, it's my own decision to buy what I wanted, but this isn't something I typically would invest in. I invest in things I understand, right? So that's usually biotech, or at least in the case of farmland. I mean, that's pretty simple. There's nothing too crazy about farmland. It was just like a basic, okay, we're going to enter a high inflationary environment. This seems like the best kind of asset to get into. But anyway, hopefully that answers your question, Ben says. Those are the 2 times I've leveraged my positions. So, yes, no, back to Telegram. That's what we wanted to talk about. Okay, so we have a post here from May 15th, 2020. This is going to be really fun to read. This is such a victory lap. Okay. And it reads, ignore the volatility in platinum and palladium. Recently has underperformed compared to others in the commodity matchup, gold and silver. So just for some context, at this time I was investing in gold, silver, platinum, palladium, and I think a few biotech companies around the coronavirus, COVID-19. I think I was in like in a PPE company. I was in one of those online meeting companies, and then farmland, right? So those are the four things I'm in. And out of all of those, every single one of those were home runs, right? So the PPE one, I think like 5X'd or something insane like that. The only thing that didn't do well was platinum and palladium, which later I admitted in this Telegram journal didn't do so well. I didn't lose money. It just didn't go up as much as I wanted it to. So I think I quit it after like 6 months. Gold and silver did very well though. Not as much as farmland as we're seeing now. Anyway, regardless, one must think about commodities in a longer time frame. Isn't that so true? Looking now, today, versus what I was writing back then, just look at what oil's done since now in this high inflationary environment. It's insane. It's amazing how prescient this was. The Fed only began buying MBS mortgage-backed securities yesterday. I will let this play out. 2 months post-U.S. coronavirus lockdown is too early to waver. Inflation at the moment is likely not yet overcoming the deflationary pressure caused by the lockdown and economic damages. Later, it will likely become more visible as more of the bailout this time was expressed directly via consumer spending and the $1,200 stimulus checks, and more devastatingly, the fire hose of money thrown at big banks and investment firms like BlackRock. Mic drop. Mic drop. This is essentially calling, we're going to have inflation. It's going to flood into things like, where's the part about farmland? I mean, I was talking about farmland all over this journal. I'll have to find it later. But oh, we can just do a search now. Yeah, this was a lot. Okay. Let's see this right here. Yeah, I mean, I was talking about farmland in here. Let me find that. Just find that real quick. I was talking about farmland as one of my... Yeah, this was it right here. So I pretty much was laying it out here. Farmland, gold, silver, platinum, palladium, and the other ones I talked about on my channel, right? So... I mean, like, I missed a few things, right? Like, minus oil, those are pretty much, in this inflationary environment, the best performing assets that happened, right? So, again, farmland, it's beating Tesla, right? So, you know, while all these people are getting, like, wiped out on their, like, their tech stocks, like their hype meme stocks, but whatever the latest... I've seen, like, flying electric vehicle stocks that people lost a bunch of money in. Yeah, I think the real winner here is you just need to be in boring old farmland. And that's what I chose to do. And it worked out very, very well. So it wasn't too insane, right? So my Michael Burry video talks about what happened in Weimar, Germany during a high inflationary period and where all the money tended to collapse to. And it collapsed into housing and food, or in this case, farmland. And we saw actually, guess what? You know, the big banks, guess where they all flooded into? They flooded into... Among farmland, which we saw in the big shareholders, is housing, right? So suburban housing. So let me go back here really quick. I'll have to get a new tab going. BlackRock suburban houses. Okay. Fed BlackRock purchase program. So this isn't really, I don't want to get too like ideological, obviously, but this isn't really a free market economy. So when you're investing, unfortunately, you kind of have to look at it like as you would like state purchases in China, right? So this is a state-run, or at least a Federal Reserve-run economy. So the assets that are going to do the best are the ones that are bought by the Federal Reserve. And so as a result, I saw this article back in June 1st of 2020, which you'll see it's important in a second. Right, so I saw this article in June 1st of 2020. BlackRock is the biggest beneficiary of Fed purchases of corporate bond ETFs. And it actually turns out it was more than this, right? So one private firm, among a few others, I think Vanguard was another one, was getting all the money from the Federal Reserve printed before the inflation hit the economy. So they got to choose where to spend it first. And so I was thinking, okay, so we just need to follow where these guys are going because that's where all the money's going to flood into. And let me find this next. And guess where that money went to other than farmland? Investment firms, this is a propaganda video. It says investment firms aren't buying all the houses, but they are buying the most important ones. Essentially, this article is about how BlackRock was taking all the money from the Federal Reserve and flooding into the private housing market, like buying suburban homes and turning them into rental property, right? So they were taking pre-inflation, like printed money from the Federal Reserve and using it to buy housing, which people were talking about to their credit. I think Zillow was also trying to take over that too. But one thing that they weren't talking about is right now, as we were speaking, there's a Wall Street takeover going on in farmland. Again, Vanguard, BlackRock, and they are flooding into this, in my opinion, no matter the price. Like, part of this obviously is the price adjusting with inflation, but also part of this is that like Wall Street's got a bunch of cash that's a ticking time bomb before like inflation wipes out its value, and they're crowding into things that are real. I mean, this is what Wall Street is buying. They're not buying they're not buying like the latest AI microwave company, or again, I don't even know what these meme stocks are because I don't follow them. And like, I know it makes a less exciting channel. My videos aren't as exciting, but I think the results speak for themselves, right? I'm not talking about tattooed chef or anything else like that. I'm trying to make like real macro level plays and real macro level analysis. And when you're doing that, you can't come up with a new pick every single week like some of these other channels. Like, again, I try to go for quality over quantity, and I hope the few people who do watch that appreciate it, despite the fact that, again, I was giving incredibly valuable information and only got 340 views. I mean, this was an easy 3X, stable property. No, not stable property, stable stock. Nothing crazy was going on. You weren't going to be losing any hair, being stressed out over it, and it was a 3X. I don't know what else to give to you people. Land property, take a look at 1990s Japan. Yeah, I've seen a lot of people draw comparisons between what's going on now and 1990s Japan, and I definitely think there's an argument to be made there. But anyway, I'll take a few questions, and then I'll talk about what's the next move for me in this area, right? So we've got a win now, but now we need to start looking towards the next 2 years. So I'll talk about that in a second, but first we'll do a brief Q&A. So if you have any questions, or there's something I went over that I didn't explain well, or you want to have me go over again, let me know. All right, so John Doe asks, so do you think there will be a depression happening soon? So around 5 to 7 years. Well, that's kind of complicated, right? So we're in a totally uncharted territory when it comes to financial policy. So this isn't quite, we've never had a depression or major financial collapse like we have these days with how the Federal Reserve is acting with interest rates. Like, interest rates have never been this low for this long. So I will tell you just at a very basic level, I think, to be honest, we already are living through a depression right now. It's just being expressed differently than you've seen in other generations, right? So we're not seeing people get wiped out in stocks or anything crazy like that. Ironically, the stock market is holding up the best thing out of everything in the country right now. And the country, by that I mean the United States, Canada, like that. Good luck getting a refrigerator. How long do you have to wait for countertops, refrigerators, electronics? I mean, there are massive shortages, massive delays, social unrest, labor strikes, labor organizing. Look at food prices. I mean, do I have to bring up articles? You guys know about that, right? Food prices, depending on what you're buying, they've doubled in some cases. Again, this is part of why, people who listened, including myself, made so much money on farmland. I mean, you already are in a depression, you just don't know it. And this time it was expressed through inflation instead of collapsing stocks. So for whatever reason, at least for the moment, the Federal Reserve and obviously the financial powers have decided the economy is collapsing, but for sure we're going to make sure that collapse doesn't happen in stocks for the moment. I mean, that could change, right? So stocks have held up very, very well, but everyone else is doing terribly, right? So there are more renters now than ever. It's impossible just about to buy a home, minus like the low interest rate loans you can get, putting yourself further into debt. Food prices are the worst they've ever been. Good luck getting electronics. So, I mean, I hate to say it, but if you actually take a look objectively, be honest with yourself. Since March of 2020, when that first lockdown happened, has your life gotten better or worse? And for me, I argue just based on how much the dollar's been devalued and how much prices have risen relative to people's savings, I think about just about everyone's life has been cut in half, the quality, right? So in half, right? So based off my rough guesstimate calculations, I think the people's savings have been, half of it's been stolen easily. So hopefully to answer your question, I think we're already in a depression and it will get worse. But ironically, out of everything, I do think the stock market will be one of the last things to collapse. One thing, the United States government does very, very well is it does a really good job of pumping up its assets, right? So whether it be 2008 or today, I mean, it would take everything to fall apart before they let this line go down, before they let green line go down. I mean, it's obvious that this is a consistent policy across all administrations. They don't want green line to go down no matter how bad life gets for the average person, right? So there, unfortunately, this is why I advocate so much investing on my channel. Um, you know, the Federal Reserve policies have really, really benefited and advantaged people holding stocks at the expense of everyone else. So people who are not in stocks, you're getting destroyed out there. I mean, just the fact that the price of a burger has gone up by half over a year, right? And if you're in stocks, you can kind of shield yourself from that. But if you weren't, you're getting destroyed. Your quality of life, your standard of living is getting destroyed. So that's why I talk about, getting in stocks so much on this channel. It's rigged as it can be. It's bad. It's really bad. Let me, I think the chat's scrolling by kind of fast here. So, all right, that was the depression question. We talked about that. What happens to your land stocks if Powell bumps interest rates 5% in 22? Well, and this is pretty standard. As you all know, all stocks do badly when interest rates go up, right? So that's a separate calculation. I was going to talk about that a little bit. But yeah, all stocks will do very, very badly when interest rates go up. So obviously the thing you would want to be in at that point is bonds. So, I'm speaking from your position, not mine. If I knew that interest rates were going to go up like 5%, then yeah, bonds would be the place to be. I would be buying bonds right now. No, I'm not really in that mindset at the moment, but that's the pretty basic calculation. Interest rates could absolutely go up. So for example, Turkey, can I actually find that? News. So the lira has fallen at a record low. Erdogan is defending rate cuts. And I heard some talk on Twitter that Turkey, which is the 20th largest economy, is considering putting interest rates up 20%, right? So as soon as a country breaks rank, a major country breaks rank, ups their interest rates, money's going to be flooding in there, and that could be the domino that knocks it all down. I'm not much of a collapse investor. I mean, people have been talking about the collapse of the dollar for decades now. I mean, like I remember Peter Schiff in 2010 screaming every day on the financial news that the dollar was going to collapse any day, that gold was going to be it. And that just didn't come to pass. So I really think all the effort of like the state goes into holding up these stocks because so many wealthy people hold them. And I really think it will take everything else collapsing before these things finally go down. And at that point, you've got bigger problems to worry about. I mean, like ideally, when you're investing, you should have your basic material needs taken care of, right? So you should, have your property. You should have enough food to get around. You should have a skill. You should be able to like as much autarky as possible. You should be as self-reliant as possible. And that's if you look on my channel description, that's one of the things I preach about on this channel. It's personal autarky, right? So if you got your personal life in check and you're ready, interest rates will go up, inflation's hitting it. The way to survive during high interest rates is not to sell, right? So there's a channel out there. I forget that name. Let's see. Romania inflation. It's this guy. It's like Star Path Academy. So he talks about living in high inflationary, hyperinflation environments, and he pretty much says that the best way to, I'll sum up his videos for you. He says the best way to survive during high inflationary environments is get to a point where you're so self-reliant, you've got a good community around you, you're stocked up on supplies, you have your house, just don't sell no matter what you do. No matter how things spike up, no matter how much money it seems like you're making, you got to make sure that you don't sell. That's his opinion. I'm just saying what my impression from his videos. So it's not necessarily what I'm saying. Do you invest in real estate, e.g. rental property, storage, etc.? I'm trying very, very hard to invest in real estate, but no, I have not yet made that leap in, but I'm looking around a lot for it. I'm actually looking to get some rental properties. Peter Schiff is still going off on crypto, even though BTC has outperformed gold. Yeah, so ironically, and I have a video about this on my channel, about how Bitcoin and gold effectively perform the same role, though Bitcoin seems to do it better. It comes down to a matter of preference, right? So older people, boomers, prefer gold, and younger people prefer Bitcoin. And just to sum up Peter Schiff really quickly, as they say, a broken clock is right, twice a day. And in his case, he's been saying every year the dollar was going to collapse, including before 2008. There's literally like compilation videos of him saying, maybe actually I can find that. There's compilation videos of him saying that the dollar is going to collapse every single year, and he finally got it right one time. It's amazing how many videos there are about him, about how the economy is going to collapse. There's got to be one from like... Oh, there's me. There's got to be one... I can't find it. You'll have to take my word for it, but he's been predicting a collapse every day since forever, and of course because his firm sells gold. You got to look at people's conflicting motivations. Yeah, I'm really looking to invest in real estate, or at the very least secure my property around me, so I live in a place I don't have to worry about rent or anything like that. That's very important to me. But again, seeker of light, I haven't got into that just yet. Invest in bugs. No, I don't think I'm going to be doing that. All right, I think that was pretty good for a Q&A. Hopefully that answered everyone's questions. We'll move next to what I'm doing now. So, and I have a post about this on my Telegram journal. Actually, maybe I can just switch to it. Trucker missed you, bro. Yeah, thanks. I have to admit, I'm not the best about uploading, but, you know, I prefer quality over quantity. If I don't have a solid idea to bring you guys, I don't want to upload, you know? Like, I guess if I wanted to, I could upload about how the stock market's gone up 0.5% and then down 0.5% the next day, but that's too disingenuous to me. I mean, I think I'm wasting everybody's time. So anyway, where is that? Ah, here it is. Okay. So we'll switch over here to Telegram and then back to Yahoo Finance in just a moment, okay? Okay, so I was talking about something very related. FYI, my favorite SPAC, Glee, looks to be closer to an acquisition. And so what I mean by that is this is something that's really under the radar, and I think will do well just based on the virtue that land has done very, very well. So there's actually a SPAC here. It's called Glee, Gladstone Acquisition Corporation. And it's intending to do, obviously, a merger capital stock exchange. It's pretty much an acquisition company in the agribusiness, right? So agricultural sector, which we've seen. Same management team, by the way. This is Gladstone Land Corporation. This is Gladstone Acquisition Corporation. The same team that's dominating in the farmland market. They've got a SPAC. And you can look at the volume here. Yeah, only 5,000 shares. I mean, this thing, nobody's in this. Nobody. And look how farmland's done. And so what this is going to do is this is taking SPAC money and buying more farmland, not just renting it out, right? So, well, this is actually a good time to talk about the commentary around that. So let me switch back, okay? So I'll read it off and then narrate what I'm talking about. FYI, my favorite SPAC, Glee, looks close to an acquisition. That's another bonus here. The icing on the cake here is, based on what I'm going to read to you later from a conference call on land, unlike with other SPACs, I think this thing is close to an acquisition. I could be wrong, but I don't think there's much time left to wait. So I got this from the land earnings call transcript. And there's a source for it here. You can find me in the Telegram journal. You don't have to take my word for it. You can read the Q3 2021 earnings call transcript. So there was a question here from an analyst, and he asks, the acquisition vehicle, and he's talking about the SPAC, Glee. I mean, are the opportunities which you're looking for out there going to be too big for a taxable REIT subsidiary? And so what he's talking about is land is a REIT, right? So REITs can't buy actual businesses. They can only buy like a real estate asset and then rent it and then collect those rents and distribute it to their shareholders as a dividend, which is what Gladstone Land does. So what this management team was, they created a SPAC where they can actually buy like agricultural or like farmland or food businesses properly and not just the farmland. Really interesting. So and back to the earnings call transcript. Is that the reason why you're going that route rather than just putting any of the operations into a taxable REIT subsidiary for the time being? And this is the president, David Gladstone. Yeah, they are too big and they would overshadow everything, which means probably big acquisition. And as you know, if we bust that regulation, we are out of the REIT business for 5 years. So I don't want to break it in. So that's why we're there, and we're going to keep getting these opportunities showing up and saying, we'd like to sell the whole thing. And we'll say, well, hang on. As soon as we get public, we'll be able to distribute some of the $100 million that we have in that SPAC and also give you some publicly traded stock. We're working on some right now. We've got some in here. And when is our acquisition call? Do we have a date? Anybody know? So there's a lot going on here. So first things first, they say they've got a lot of opportunities showing up. These people don't want to just sell their farmland or their food business. They want to sell the real business, and a REIT can't do that. So that's why they created a SPAC. Makes sense, right? They got $100 million to do that, right? So that's $100 million going into like an asset we've talked about over the stream that we know Wall Street is clamoring to get into. Like they're almost paying any price for it at this point, right? And they're trading some of it for like obviously raised money and publicly traded stock. And they're asking, when is our acquisition call? The fact that they're talking about an acquisition call probably means that the SPAC is close to an acquisition. That's how I'm reading it. You're welcome to read it a different way. This is how I'm doing it. So he's asking about a date, right? And the treasurer, the CFO, is saying, we don't know yet. So the president replies here, right? We don't have a date yet? Okay, I know he's filing next week, is it? So this is talking about next week. I don't know if it'll be necessarily that soon. This SPAC was supposed to IPO in March. Then it IPO'd in August, so that was a little bit late. Things move slowly in the farmland world, but this is exciting hearing this. So is the filing next week, is it? And then the general counsel replies, isn't it filed? And the reply is no. Same thing from the CFO. It hasn't been. Then read this. This is the crazy part. It's the case, so it'll happen soon. You'll get a copy of it, obviously, Rob, and maybe by then we'll have something a little more firmed up. I don't think it's going to be a problem finding things to buy. We've seen a lot of those. That's another good thing, too. People always worry about SPACs not going through on the acquisition. I don't see any nervousness about that at all. And we want to buy, and this is a really crazy thing. I've never seen a SPAC run this way, but now that I think about it, it's genius. And what we want to do is buy several relatively large ones, referring to food businesses, farmland, right? And start out as a diversified group rather than just one thing, and then continue to buy smaller farms and operations and have a good operating team. We don't have an operating team now. We'd have to tap one of our tenants to do some of that, but I don't know how that's going to work until we buy the first couple of farms. So I've never seen a SPAC run like this where they make a bunch of smaller acquisitions, but it makes sense, right? It's pretty much the land formula, but just in the form of a SPAC. They're not seeking out one huge hype company to merge with like some of these other like scam SPACs that haven't done well, that had a lot of hype and famous people behind it but left their shareholders high and dry. This seems to be a proven method. They're going to be buying all kinds of food businesses. And again, back to the investment thesis, this is something that I think has potential going forward, right? It's not quite as played out as land, right? This isn't like the 3X that you guys have seen, I've seen. Nobody's in this. Nobody knows. There's no attention. And if you go to the conversation, there's only 8 posts. I'm sorry. I didn't switch back to my Yahoo Finance. Why don't you guys tell me? I was doing all kinds of stuff. Anyway, so I was saying this thing, like, we've already been through the 3X. Looking back at the SPAC, same business, just about the same operating team. Nada. Nobody knows about this. There's no attention. And going back to the famous conversation metric, right? So you always want to be ahead of the herd. So, I mean, credit to these guys. They're probably ahead of the normie investor. They're ahead of the guy, like, struggling over, like, PayPal's price fluctuations or tattooed chef, These guys are ahead of those guys. 340 reactions in this one. Talking about inflation. Good. Little late, but good. Compare that to this. Gladstone acquisition Gleed, the SPAC. 8 reactions. Just 8. Right? This reminds me a lot of the conversation this stock had a while ago before people were paying attention to it. I mean, like, if you're looking, this thing got like 1 comment a month. Like, this is 8 months ago, 6 months ago. This thing, nobody was paying attention to the stock, despite the fact that it was like crawling up and up and up every single day. It seems like they only started paying attention in the last 2 weeks, now that it's approaching $30. So anyway, that's the move I'm making. I see it's the same thing. Obviously, money is flooding into farmland. There's no attention on this. It's the same management team. That's where I think like my next, I could be wrong obviously, but I think that's where my next multiple is going to come from. My next multi-bagger. Eager to hear what you guys think though. So I think that's the whole presentation for the farmland hypothesis. I've been running in my Telegram journal for a while now. I will say it probably, I need to start thinking about what's the next thing 2 or 3 years from now. And I will be doing that. When I think of something, I will let you guys know on the YouTube channel and the Telegram journal. You want to follow those 2 closely. But for the moment, I really am reaping the rewards of that thesis I had in, March of 2020 last year. It's the feast is coming to the table, to use a farming joke. So anyway, this is what I'm excited about. So Let me know if you guys have any questions again, or if there's something you didn't understand or you want me to go over again. Let's see what we got here. Switch to live chat. Okay. That's interesting that YouTube's algorithm is so smart that it picked up you were talking about Peter Schiff and put you in a YouTube search of his name. Yeah, or it could be that I'm watching my own stream on another tab. I'm not sure. I don't know the reason for that actually, which is surprising because I have over 1 million subscribers across my channel. What about land agri with more vertical integration and a brand like Del Monte? Okay, so let's check that out. You mean this one, AgriForce Growing Systems? Is this it? So, I think this one actually, I'm familiar with this one. This one I believe went public through a SPAC. Let me confirm that. I've heard about this one. I took a look at the whole farming sector. This one I think became public later anyway, so I didn't have an opportunity to invest in it last year. It looks like it IPO'd. Okay. Please confirm though, Ben says, if you're talking about this one. It looks like it's like one of those techie hype stocks where it's like literally about hydroponics. Yeah, like, I mean, look at all these buzzwords. Artificial intelligence solutions, micropropagation and genetics, fertigation and nutrient services. I think this is just, this is hype central, you know. And yeah, this thing IPO'd this year. You know, maybe it's going somewhere. I see like a lot of tech buzzwords. It's got 5 employees. Not too excited about this one, and the price reflects it, right? The whole point of farmland is also, by the way, part of it too, the physical land. You know, at the end of the day, vertical farming is not there yet. Del Monte, okay. I don't see anything about Del Monte. Old world type brands do know of it as a ticker. Well, there are alternative agricultural businesses I can show you, like real ones, not like this hype tech stock stuff. So for example, obviously there's FPI, which isn't a bad one either, Farmland Partners. It's another REIT. If you look again, this thing doubled. It didn't do as well as land because it's not as good of a company, but again, it's done very, very well thanks to the high inflationary environment. But you can see obviously it's not as well run of a company. I looked at it and I considered it, and it has done well. It's doubled, but it didn't quite have that land spark, right? So looking back at land, I mean, this thing just grows and grows and grows its revenue. It's such a beautiful company. This one's not quite there yet. And the dividend's lower too. But yeah, this is another example of how the thesis played out in a different farming company as well. Let me try to find what you were talking about. You said you were talking about old world brands or Del Monte. Let me try to figure out what that is. I have to admit, I've never heard of Del Monte. Oh, so this is canned food? So it does, by the way, it has a ticker. Looks like it's on the Philippine Stock Exchange. Interesting. I know that for a fact too. There's like United Fruit, right? There's the oh no, wait, that was the company that did that coup d'état in Central America. That's from history. That's not a real company. Yeah, you could go for actual food companies definitely too. I don't see any harm with that necessarily. But at that point though, you're speculating on certain food prices and you're getting really deep into the commodities game. And honestly, that's above my pay grade. I don't know how much more bananas are gonna play with inflation versus meat. I don't know which one's going to be better. So that's kind of why I went for the approach with land, where it's a combination between you are betting that food prices will increase, which, by the way, they did. But it's also betting on the real estate aspect of the fact that, real estate, in particular farmland, just does gangbusters. It does very, very well in high inflationary environments. So I see what you're saying with buying actual food companies. Again, though, that's breaking it down. Like, obviously, there's Nabisco, too. You're breaking it down to betting on specific kinds of food and how well they perform. And again, you need to remember, so food companies usually are again, about production, distribution, packaging, like that, right? So that's one step further down the supply chain. And in high inflationary environments, you want to be as close to the base materials as possible and not further down the supply chain. Because the further down you get during the production line process, like, so the more and more advanced components or products you're making, the more inflation harms your company, because you don't know how to value your base components of your product, right? Because the prices are fluctuating all the time, and it's easy to go out of business when you don't even know the basic prices of what you're putting into your products, right? So let's say you're building a toy car, and the rubber for the little wheels on that, one day it's worth $5 a strip, and then the next day it's like $100, or I'll even do something similar, something more simple, $20. How do you know if you made a profit when you sold it yesterday for $30 if the price keeps going up and up and up? And so that's how it's very easy for firms to go out of business that are further down the line in production versus firms that are making like essentials of life or basic materials. Now, obviously, something like farmland isn't something that's too great in a non-high inflationary environment, right? So if you look about, this thing did nothing for 4 years. It just wasn't an exciting company. No, it was much smaller back then. I will say that, but it was paying a dividend too. REITs have to pay out their earnings, 90% of them, in the form of dividends. But like in a growth phase, like we saw, during the 2010s, especially the second half of the 2010s, obviously all the attention was on tech and all that. And for the most part, like in normal environments that aren't economically distressed, that aren't inflationary, those companies that are making more advanced products will do better than farmland. But not in a high inflationary environment where they don't know how to do their own price discovery, or where they don't know how to price their own products or losing out. That's where farmland does well, really, really well. That's where you want to be. But generally, no, it's a pretty stable asset. So it depends. Would I hold this like during a boom cycle in the economy? I probably would, just because I like it. I like dividend payers and I like stability, but it would play a different role in my portfolio. Rather than for looking for growth, or in this case, an inflation hedge, I would be holding it just as a dividend payer, or as like a, like a safe alternative for my money, like a pseudo gold. How long have I been streaming here? Oh, just about 1 hour. Okay. We'll take a few more questions, and then we'll call it a stream. I do want to say thank you, and I appreciate everybody who came out for the stream. This is really great. Let me take a look at my watch list and see what else is on my mind, what kind of stocks I'm into. Oh, this is one that's actually been doing very well. I haven't held it that long. I should do a proper stream and Telegram post about it, but I haven't yet. And I'm still looking into it. I need to think a little bit more about it before I do a full video about it, because when I don't talk about a stock, I feel like so much of my reputation's on the line. I don't want to say something wrong. It hurts so much. So for example, and I regret this so much, this is one thing I was very, very publicly wrong about, was CD Projekt Red. And this thing it crashed in like early 2021, and I thought it would come back, and it never did. So for people who believed in me for that one, I feel bad. I definitely do. I'm not liable or anything, obviously. The point of my channel is just documenting my moves, but I feel bad talking about that. Obviously, I'm not responsible, everybody. Again, I'd say a million times, do your own diligence. This is just what I'm doing, but that was bad. So I want to be very, very careful about what I talk about. Now, that was one loss amount of how many wins I've logged on this channel. Like real wins, by the way. I'm not just talking about things after they go up. You can see, again, I talk about things before they go up usually. I'm not just playing hindsight bias, or what's the word? Hindsight, benefit of hindsight. I'm not doing that. So anyway, carbon. This one's really interesting. So this thing has done insanely well. It's literally just a 45-degree angle line. There's not many people talking about it. And what this is, it's a carbon ETF. This investment seeks to provide a total return before fees and expenses of the global carbon index, right? So it's attempting to maintain exposure to carbon credit futures, and the same as those included in the index, blah, blah, blah. So essentially this is about carbon credits. And this is pretty much a bet that, the Wall Street, the major firms, and the government's going to want to keep going into the green energy carbon credits thing. And it seems like they're pretty determined about that. So if you want to bet with the system, this seems like one good way to do it. If you think they're going to win out on green energy, they're going to force the carbon credits thing. This seems to be a good place to be. So I put a little bit into it, and you can see it's done well. So actually, since inception, this thing's doubled. And I think when there'll be some major headline at some point, and green energy will finally get mainstream acceptance. Just the whole carbon credit scheme. They've been talking about this for years. I'm in this one as a hedge. I like to bet at what I think is real quality, and also just bet where the Federal Reserve money is going to. And it definitely seems to be going into all this green energy carbon credit stuff. So what made me think that CD Projekt Red would recover? Because it's relatively easy to update a game. And I thought that the correction was too much, right? So I have a video about it. Let me find it. A video and Telegram post about it. I was just flat out wrong. This is a more recent one. Yeah, this one. Let's see. I pretty much was thinking that, oh yeah, this was it. So I remember now. So I realized a lot of the stock price coming from CD Projekt Red's collapse was because people were nervous about these lawsuits. You can see them right here. And again, I talked about it in the video, but Googling these lawsuits, a lot of these were from ambulance chasing firms. And I was right about that, by the way. They haven't really encountered any serious legal troubles. The only problem was that I thought, just based on, there's been previous controversies. So for example, there's Electronic Arts, right? And people complained about their Battlefront 2 policy. They had some loot box thing that got everybody angry in the mid 2010s. And I made a funny joke about it, but literally that jump during the Battlefront 2 controversy was this drop in the graph right here. Nothing bad happened to it, just marched up and up and up. So I thought, just based on the fact that, gamers make a lot of noise on Reddit, but actually stock prices tend to do well. And I assume, just based on some of the numbers I was seeing, just based on Steam sales and the model I was building, I thought CD Projekt Red would have the EA effect going its way. I thought they were going to fix this game. I thought the bugs weren't that simple. People seemed to like the story. I was going based off of reviews and people uploading YouTube videos. It seemed like there was a lot of activity on social media. People obviously were playing it, but that did not come to pass, right? So here's something I was talking about. CD Projekt Red stock is probably in buying territory. Mark my words, gamers throw a hissy fit every time EA releases a broken, unfinished game. Stock price goes down for a day. Redditors and YouTubers celebrate. Then 1 week later, the sales numbers come in. We did it, guys. The stock price went down. We still bought the game, but we hit them where it matters. Now they have to listen to us. Wait, why is EA rebuying their shares? So maybe it still could happen, but I will admit I was very, very wrong about CD Projekt Red. It just didn't go to where I needed it to be. Now, obviously, I bought after the crash, but I think in here, but it's done nothing. So maybe it will come back someday, but I don't know when that day will be. Yeah, bet on those. Thanks to those energy costs, they're going to suck you dry, which is happening in Europe already. Yeah, that's the thing. With the whole carbon credits and energy costs, it seems to be a desire. They want to raise energy prices. And, if you're going to get destroyed by your electricity bill, at least you should profit on the other side. You know what I mean? At least it'll keep you neutral. Yeah, I think kids are right about the AMC and GameStop stocks. The negative beta means the stock will operate opposite of most stocks. Yeah, there's money to be made there, but that's a sentiment trade, and that's not the kind of thing I do on this channel. I don't like to trade on hype. Smart man said that. Indeed, indeed. What are you doing to prepare for a potential market correction or crash? Well, there's a lot of things I'm doing. So I'm not personally in crypto, but I can see why some people would enjoy that or think that's a good alternative. Out of all the cryptos I like the most, definitely Bitcoin Cash. I like that. And I don't know which of the smart contract platforms will work out. So obviously there's Cardano, Ethereum, and Solana, and a few others. So I can't say which one will, but there's definitely a desire out there. There's a market for the smart contracts. I just don't know which one will win. And obviously, if you want to do a more basic bet, there's XRP, which is Ripple. If you want to bet based on the outcome of their lawsuit, there's that available to you. But in terms of preparing for the collapse, I think the best way to prepare for it, actually, out of all things, is just keeping it simple. Again, there's a channel I highly, highly recommend. It's called Star Path Academy. It talks about how to do well in hyperinflation environments, just like down to everything, like from food, housing, everything. So anyway, I think the best way to prepare is food autarky. You need to be, as much as you can, either producing your own food or like finding a way to like get close to somebody who is producing their own food. Secure your own house if possible. Get it to where like you're not going to be evicted. You're not as reliant on the outside as much as possible. Pretty much autarky. So for me specifically, I want to get a property I own. That's something I'm working on really, really hard. I'm making sure I'm stocked up on food for a long period of time. I'm in a pretty safe place, so I don't have to worry about civil unrest necessarily. One thing you should prepare for the market correction or the crash is you got to get close to your family. You got to get close to people in your life. Like at the end of the day, you're all going to need to rally together, and it's not something you can take on alone. Get involved, get into a group. The best investment you can make, by the way, in an inflationary environment is yourself, right? So you can't, at least not yet, you can't have muscles taxed away from you, right? If you're in good shape, your mind's sharp, you're in your best health, that can't be taken away from you. I bought CDPR pre-crash, was right about sales, but did not consider how important games as a service is to EA and Activision's success. They bought Cyberpunk 2077, but there was no Loot Crate dollars coming in. Yeah, that was it exactly. Thank you for saying that. That was another thing too. The sales, I was right about that part. I was very, very right about that part. So the sales number for CD Projekt Red were good. I mean, it had incredible sales. The revenue was there, but it was not as much as I was expected to be. And that was because they decided to can multiplayer, which is the source of the ongoing revenue and microtransactions. Like the bugs were so endemic that, without all the microtransactions and loot boxes, the software as a service revenue just wasn't there. And so I can't invest in this. I'm not excited or happy about, Cyberpunk 2077 until they get that multiplayer going up. Again, watch my videos because everything I said was right except for the stock price, which was the sad thing. Where was it? Or I know I talked about it somewhere. This was about EA. Oh, this was so funny here. I was showing like, look at that drop. This drop in EA stock was so terrible. Oh my goodness, they got wrecked by that controversy. And then I said, oh yeah, I was saying that, and then I cut. And I said, oh wait a minute, it's not this drop. It's this drop right here. That was EA's big controversy gamer hissy fit. Where was it? It might have been. I remember I was talking about like all these YouTubers making clickbait content about how the game is bad, which was really exaggerating the situation. But I want to talk about how. So there was one thing EA did, which was like Mass Effect 3 multiplayer, which was like an insane money fest that I thought CD Projekt Red would have, and they just canceled it. Maybe it wasn't in this video. It might have been in this one. Yeah, this was it. Yeah, so Mass Effect 3 multiplayer, this thing was such a moneymaker. It actually was the biggest driver of revenue for that whole game, not even just buying the game itself, right? And I thought they would have that same effect, but as soon as they canceled it, my theory fell apart. Starpath is a very down-to-earth channel. Solid advice as far as I've seen. Sadly, getting property is very hard right now where I am. Yeah, that's the thing. You needed to be positioned in property before the 2020 crash. Like now just where inflation's gone, like I'm going to be honest, probably before March of 2020, if you were going to buy your house, that was probably your last chance. I mean, minus something exceptional happening in your life. Yeah, I'm sorry guys, but the price of housing, just like with farmland, is just shot up so much. So, if you were waiting in cash to buy that thing, the opportunity just flew out ahead of you because so much of your money in your checking account was stolen through inflation. I knew that was happening. At least I knew that was going to happen. So I try to position myself, but there's only so much you can do. You can't really beat inflation. You can position yourself to where it doesn't hit you, but it's very hard to benefit. Let's put it that way. Now, Starpath Academy, how to profit during hyperinflation. If you want to be ahead of the game, assuming you think that there's going to be hyperinflation, I'm not quite there yet. I think there will be high inflation. I'm not quite sure about hyperinflation. I'm actually more worried about other problems than necessarily the economic ones. But anyway, there's a video right here. You can watch how to get rich during hyperinflation, learn to surf the waves. And this is an hour long. There's a lot of material and content in there. If you want to take that path, I'm just telling you this path is available to you. Guess what? EA is facing another gamer hissy fit. What does the stock price look like? Is that true? Do they have another controversy? So it looks amazing to me. Pretty stable over the last year. I guess it dropped from 145 to 128. Is that the big controversy? It's done pretty well. Oh, this was Battlefield 2042. Is that why people are angry? They never learn. Never learn. Nassim Taleb says hyperinflation is exaggerated by some measures. There is deflationary pressure. Yeah, this inflation is not uniform. That's definitely for sure. It's definitely hitting certain sectors harder than others. It seems to be crowding the most into, ironically, this is weird, cryptocurrencies, real estate, and land. Those are the three things that seems to be hitting the hardest, which is interesting. All right, guys. Really appreciate you guys coming out. I've been streaming for an hour. I got to get going. I'm going to try to stream more regularly. I really enjoy this. So if we can get like a regular crowd here, that would be great. I tell you one thing. I've been kind of lazy about making videos. I think you guys can see that. It's just so much easier to hit the stream button and go, you know? And by the way, good for you, EC, helping your family. I think that's the best investment you can make. All right, 4 people watching. Good stream. All right, guys. Again, take care. Be careful out there. Follow the Telegram. That's where I think my best content is, frankly. And I'll catch you on the next stream.